Okay, let me know if you can hear my voice and see my screen again. Please let me know if you can hear my voice and see my screen. Oh, I'm so sorry. Don't believe. I think I have to share a new link. I'm sorry. Okay, there's no cause for alarm. All right, I think we're good. Let me know if okay, good. Sadiq, good. Let me know if you can hear my voice as well. Let me know if you can hear my voice. See my screen, hear my voice. Important. Once that's out of the way, I will take you right in. Okay. I'm hoping that we can get a setup triggered on time because I have to be somewhere by 9. Okay, good. All right, good. Thank you. Thank you. Okay, guys. So I want you to pay attention to everything I'm going to show you now. All right, because I see a lot of you making a lot of mistakes regarding the use of the strategy. The first thing you have to do, the very first thing, which is the most important thing to do, is to know who has the strength, right? Who has the strength to move? Who is the strong guy? Who is the weak guy? Okay, I showed you in the other class. I don't know if I did, but I think I'm going to make it a new class where I'm going to teach how you can clearly define the strength of the market, because the strength is important. Okay, more than just looking at the H1 and seeing who is in control, right? So if you don't have all the time, okay, you can simply look at the H1, right? You can see one of the Excel sheets I sent to you here is H1, okay? This small one you can see is H1. This on H1, going by the market structure, dollar is -5, weak. Euro is 0, neutral. GBP is -3, slightly weak. AUD is 7, strong. That's because there was a huge, move this morning, right? Around 5:30 or thereabout Nigerian time. Okay. NZD strong but not so strong. CHF neutral. CAD not so strong. And then JPY not so weak but weak. Okay, so you can see that if I know that somebody is very strong and the other person is very weak, is a one-way traffic. So if I get a breakout on that kind of market, it means that the market is clearly going one way. Unless there is something in the higher time frame that is a barrier, Okay, that's why you have to look at the multiple time frame analysis. All right, so I'm still going to make this thing clear. It took me a long time to build this strategy. Okay, it took me a very, very long. It took me many years. So if you don't get it right off the bat at once, it's fine. Okay, but I assure you, it's simple. All right. The only thing is that you have to bring in all this multiple knowledge. Like you have, it's like the strategy is like me putting together all my knowledge in in technical analysis, right? And trying to answer the basic questions, which is, condition, direction, liquidity, and entry. Okay. So we're looking for strength. We're looking for strength to know that the condition is favorable. We're also looking for direction. All right. Now we're looking for a liquidity. Okay. A liquidity sweep or volatility. So you want to see strength, and then strength comes with the London break. Okay, so I'm going to open the charts now. Having known this, it means that, of course, when you look at the big picture, the big picture is this chart here. Okay, the big picture is this chart, right? This is the big picture. The big picture is that CAD is strong and JPY is weak. The big picture is that AUD is strong and this is weak. Okay, so this is the big picture. The big picture is these are the guys that are strong. On the daily, CAD is stronger than everybody if you look at the market structure. On the daily, CAD is stronger than on H4, CAD is strong. On H4, AUD is strong. On H4, GBP is strong. On H4, dollar, no, dollar is not strong. But dollar is still strong on the daily, right? On the daily time frame, dollar is strong. But on the H4 time frame, is losing its momentum. That's what this thing means here. So daily is strong, but H4 is weak or is getting weak. So it's saying that daily is the lead, right? So it was strong, but you can see with the H4 that is beginning to get weak. Okay, it's starting to get weak, right? So what would be best to trade is looking for strength, right? Or trading weakness on NZD, or you're trading strength in in okay, at long last. All right, I'm really sorry about that. Um all right. All right. Uh okay, guys. I don't know how much you heard and how much you didn't hear. Okay, it's back. Okay, one more confirmation. I'm so sorry. All right, guys, please let me know if you're with me again, So just send me a message. Let me know if you can hear me. Okay. Luckily, there's been a pullback, so we still have some time to wait. I mean, to wait for the setups, right? So let me see. Let me see what you have. Okay, good. Okay. Okay, now, so what I was saying, I don't know at what point I got disconnected, but what I was saying is very simple. The first thing traders have to look at is the currency strength. Okay, the currency strength. When you know that card is strong, you know that these ones are weak, these ones are strong, right? When you know the ones that are strong and you know the ones that are weak, is 10 times, 20 times easier. Okay, so it gives you the edge that you need to trade for the day. All right, so why I mean, when I take beginners, I just tell them, okay, look at the market structure on H1. When you look at the market structure on H1, you should be fine, right? Just look at what the price is doing on H1. If it's selling, look for sell opportunities. We hope that it will continue. Now, every once in a while, you will take a loss. Okay, the win rate there is not as high as the win rate for when you are looking at the general flow of the market. Okay, so the argument here is that where is the big money headed? So looking at CAD, you can tell that the big banks have invested heavily into CAD. That's why CAD is trending. Look at all CAD pairs. Okay, if you look at all CAD pairs, you will find them, trending in one direction. Looking for you're going to find everything CAD either buying or selling, but you're going to surely see it being dominant in any market where it is. Okay, you will find that, okay, CAD is the one in those who are in favor of CAD are the ones who are making money on any chart that you open. Let me just go back to, right, this is CAD on M5. This is the daily, right? This is the daily. Okay, you can see let me clear out. Okay, so this is the daily, right? It looks like it's in a range, but I think this is in a range. This is in a range. It's still in a range. Okay, going by the structure. All right, it's a range on USD CAD. It's a range, but on CAD against other pairs, you're most likely going to find CAD being the dominant one. Let's look at this. Is Euro CAD. On Euro CAD, you can see on the daily time frame, you can see that the market is going down. Okay, you can see the market is going down, right? So CAD is strong. Okay, CAD is strong. If you find a breakout, of course, this is the low. If the market breaks out and gives you either an indecision bar or gives you what's it called, an inside bar, okay, a continuation bar, that's a follow through bar, or an inside bar for a sell, then you can take it. Okay, as long as it's past 7. and there's a breakout of the Asian session, Asian low. This is the Asian low right here. This is the Asian low. Okay, because this is the low before 7 o'clock. So if this low is broken, as it has just been broken now, and then we find a follow-through bar. A follow-through bar is a black bar followed by another black bar. Then you can sell. That's what we're saying. Right? A black bar followed by another black bar. You can sell. Of course, Euro card is a good sell because Euro on look at the consensus that I shared with you, right? Look at the consensus I shared with you. You will see that Euro is weak. Okay, so you see here that Euro is weak. Euro is weak. Card is strong. If I find a breakout on card Euro card, a breakout for a sell, I'll take it. Okay, because I have a higher advantage of, getting my trade to, get to target. So that's what we're saying. Okay, it's not rocket science. It's easy like that. All you do, look at the market structure. Okay, so I'm going to do a video where I would teach the market structure, right? So I'm going to do a video where I'm going to teach the market structure. Okay. So this is Euro card. Euro card, you can see there's a breakout. Okay, there's a breakout of the Asian session. Let me put in the indicator. Right, there's a breakout of the Asian session here. Okay. Oh, you can see that I think I was wrong with my Asian session. This is the correct Asian session. So 7 o'clock was here. And then this is the breakout. This is the follow through. It means that you're supposed to have been filled here. So you're supposed to have sold Euro GBP. And then if this were every other day, I would have just given you something like this, right? So once this is your breakout bar. I really hope that you can see. This is Euro card. Okay, so this is the Asian session. This is your breakout. You can see your breakout bar here is a Marubuzu. It's a Marubuzu, right? It's a Marubuzu. And then this is the follow-through bar. It's black. So where is your entry? Your entry is here. This bar, this current bar would have taken you into the trade. Okay, so what we're saying is very simple. Sell here. Sell here, right? We're supposed to have been in this trade already. Sell here. Your stop loss where? Your stop loss here. Okay, and then your target where? Your target somewhere down there. For 1:2. All right, your target for 1:2. Somewhere here. Okay, for 1:2 of this. This is how many pips? From here to here, 17 pips. Okay, so for 17 pips, I'm expecting 34 pips, right? So this is 34.1. Okay, that's your target. All right, 34.1. Okay, so this is your target. So what do? Sell. I'm going to sell now, right? Sell and then come back. And then remember what I told you before you take a sell. My stop loss on Euro card is 17 pips. And I want to risk I'm going to risk $1,000, okay, on that trade. Is Euro card $1,000? Now this is exactly what you should be doing. It's exactly what you should be doing. Euro card. So my currency is USD. The pair is Euro card. Okay. On Euro card, my balance is 115,000, and then my stop loss is 17 pips, and then I'm risking 1%. So I am expected to use 9.06 on the trade. Okay. So I'm going to break that into two parts. Okay, I'm going to break that into two parts so that I have Euro card. I'm going to take 5 and 4 or 6 and 3. Okay. So I'm going to sell with, I have 9.06. So I'm taking 6.06 sell. And I'm taking, again, don't forget to include your stop losses. All right, so the price for the stop loss would be 1.43903. Okay, take note of that. Okay, so again, I'll sell with 3.00. Okay. My margin. So I usually trade with I trade with what's it called? I trade with low leverage. Okay, on my funded account, I trade with low leverage because if you trade with a lot of leverage, you might be forced to take a trade that is more than your capacity. Okay, so that is why usually I don't take I don't have, let me show you what I'm saying. Okay, I still have enough margin. Okay, my free margin is still quite big. Okay, but let me see. But I usually advise beginners not to. Oh, okay. So I usually advise beginners not to use the leverage because if you use the leverage, you might not survive. Yes, you can. You're right. Okay, so I have my position on. I have 6.03 and 3.0. Okay, on Euro card, because card is weak and because card is strong and Euro is weak. If you have a small account, $10, $20, $100, all these accounts, I don't advise you to have that kind of account because it means that in your head all you are thinking about is how to flip the account or how to grow your money exponentially, which is never the advice. Okay, it's never the advice. It's a wrong thing to do, right? It's a wrong thing to do. Okay. Another place where we can find opportunity is Euro USD card. So if we see a sell opportunity, as we already have as well here, so there's a sell opportunity here. So you can take it if you still have space within your day trading limit. Okay, so I'm selling Euro card already. I want to add USD card. And the reason I'm doing that is because USD is temporarily weak. Okay, so saying that USD is temporarily weak, it means that I'm not going to be too confident about the trade. Instead of using one whole percent, I can decide to use 0.75 or zero point 0.5. Okay. Why? Because USD on the daily, look at it again. On the daily, you can see that USD on the daily is quite strong. Okay. On the daily, USD is quite strong. Although in the short time frame, if you look at it from the the lower scale, right, you see that it is starting to reverse, right, its position or its strength. On the H4 is getting weak. On the H4 is getting weak. Okay, but CAD is strong, and what it means is that if I take CAD against anybody here, there's a high chance of that trade working out well, right? There's a high chance. So the only two things I'm interested in doing here is either I take a breakout or a liquidity sweep in favor of these currencies. So that you can see how I have selected CAD today. Now, is it going to work out every day? No. Okay, there are days when it won't get to target. All right, your target is for the breakout, your target is 1.5 actually, not 1:2. Okay, your target is 1.5. So at 1.5, the position that I have, that is 6.00, which is 2/3 of my position size, I will close it. Once it gets to 1.5, I will close it. I'm not going to adjust my stops. I'm not going to close the smaller position. The smaller one is 3.00. The big one is 6.03. Now, I will allow the small one. Now, I'm telling you this today because you're going to see it play out. I'm going to allow the small position to run until I see that there is a reversal. I'm going to teach you when I teach you New York session. Okay, when I teach you New York session, I'll teach you how to trade. Of course, I'll teach you how to trade in New York. This is going to be covered in the mentoring program. Okay, I'll teach you how to trade in New York. And then I'll teach you how to control or manage your open positions. These are some of the things that you need to learn. Okay, because usually when people go to go online and then they pick up a strategy, they see the entry and all the rules and all those things, but they do not see the trader trading these strategies. So you see that the trader is making money with the strategy and he's showing you how he has made money with it. But when you now take up the strategy to trade it, you're not making money. Okay, and that's why you have to journal. Okay, you really, really have to journal. All right. So I think we have been triggered on USD CAD as well for a sell. So we will just join it. Okay, so I'm going to look at what stop loss I have. This is the low for this is the low. Okay, this is the breakout. This is the follow through bar. So we have a breakout, we have a follow through bar, we have an inside bar. Our entry is supposed to be somewhere down here. This is supposed to be our entry here, right? And then our stop loss, where? Here, swing. And then our target, 1:1.5. Okay, the last time I said 1:2, but it's supposed to be 1:1.5 for this one. Now, think about it. If you are looking for opportunities like this every day and you're trading a prop firm and you have a guaranteed 1:2 or guaranteed 1:1.5, not guaranteed, but a high win rate 1.5 probability. If you can add 1% every day to your account, I mean, it's a plus. It's a plus. Okay, and it will help you to grow any account and keep any account, as long as you're not looking for a get rich quick thing. Okay, you're looking to make 5, 10, 20% every month. You will get it here. I always say that this is what I use to take care of my family. Right? When I do this every day, from the beginning of the month to the end of the month, there's no way I'm not going to end up in profit. Go and look at my Instagram there. You see my track record. From January to December is green, meaning I made money every year throughout the year. Every month throughout the year. Okay? So the problem is when you have a small capital and you're trying to flip it, that's where you run into trouble. But if you're taking 1% to gain 1.5, 1% to gain 2%, like that, if you have risked 10 times on 10 days, 1% of your account, right? You can't be wrong on all 10 days. Your potential for risking 10% is 20% or 15% gain. So even if you win today, lose tomorrow, you are still up. If you lose today, win tomorrow, you are still up. If you lose 5 and win 5, you are still up, meaning you are still in profit. So it's a numbers thing, it's a probabilistic thing. Where traders have a problem is when they now begin to look for ways to make it to be non-probabilistic. They are looking for a way to guarantee their wins. That's how they run into trouble. The method I've showed you is very simple. And now you can see it right before your eyes. Right? We're saying that CAD is strong and USD is not so strong. So if CAD is strong and USD is not so strong, and then I can see that there is a breakout. This is the breakout bar. This one closed beneath the low of the Asian session. The next bar was black. So what does that mean? It means that I can put my pending order here. While this candle is forming, I can put my pending order under the black bar here. And then with my stop loss above this area here. And then I aim for 1:1.5 to the downside. Right? So you can do what I have just said here, and you make money guaranteed every single day. Every single day. This is not making money today and then losing it tomorrow, making money tomorrow and then losing, and you make money guaranteed. All right. So if you can take the time to follow this approach, it will help you. But if you're not following, now I have journaled extensively on this strategy. When I say journal, I'm saying that on paper, statistically, this strategy works. But there are two factors that will make a strategy to work and work well. The first one of it is that the system must be profitable on paper. And two, the compliance from the trader for that system has to also make the system profitable. So there are two things. Your system can be good, but the trader himself is not good. Okay, so if I have a good system that is traded on by a bad trader, that system will not be profitable. If I have a profitable system, that is traded by a trader who complies to the system, then that system will be profitable. So that's the way this thing works, right? So let's see if we can get into this USD card here. Okay, so as always, consult your calculator. I've been in this market for many years. I still use my calculator. Right? As a trader, what makes you different from a gambler is your ability to manage risk, to look for an opportunity and then put your risk on it. Trading is the only business where you have to risk your money to make money. That's what makes it emotionally challenging. Every other business, you're not risking your money. You're risking something else. You're risking your time, your skills, your knowledge, and every other thing. But in trading, you're risking your money to make money. And in doing so, it comes with a lot of emotional commitment and compliance. All right, so you have to try as much as you can to, you cannot kill your emotions or stop your emotions, but you can help yourself to control them. Control the personalities that are against your success. Okay. All right, so what do we have here? I can see there's a pullback, and the pullback can mean two things. It's either the market is not interested in going our way, the market can be testing the entries, the market can be giving us a fair price to get into. Okay, so but what we know is that the flow is still to the downside. All right, so let's see if we can get in on this one. All right. So what I'm looking at here is how many pips stop loss am I working with? All right. So from here all the way to here is 21.6 pips. All right. If you have a stop loss of 21.6 pips, you go to the calculator. You tell your calculator, I want to trade USD card. Okay. You're telling your calculator, I want to trade USD card. My stop loss is 21.6. Okay. I expect you to follow with me, right? 21.6. Okay. My stop loss is 21.6. Account balance is there, 1% on the risk. It means 7.13. Okay. So it means that what you can risk on this trade is 7.13. What I will advise you to do is to use a pending order at the entry price and then put a stop loss here. Okay, so if I have 7.13, it means I'm going to open two positions on MT4 for 5 and for 2. Now, those of you using MT4 and using your phone, I'm telling you this now because it will be difficult for you to manage. If I'm trading on TradingView or CTrader rather, I can start with 7.13. Okay, I can start with 7.13 and then I split it. But you cannot start with 7.13 and split it on MT4. If you want to manage that trade, you have to be there at the time when the market gets to that price, that 1.5, and then close it by yourself. Okay, so now we want to set the trade and exit the screen. So what it means is that if we enter, right, if we enter with a pending order here, okay, what we are hoping for is that when the market starts, when it gets to 1.5, the order which is 5 lot size, which is 2/3 of our entire position on the market, that order will be closed and the profit will be secured. Then we're still going to have 2.0 open. Now, the reason for that is some days are having huge trends. So if we have a day that has a lot of trend in our favor, okay, that remaining 2.0 lot size is going to be carried on, for if the market is supposed to move in a day, let's say the market is supposed to move 100 pips in a day. Asian session is maybe 30 pips, usually, max. London will come and then break out and give you an additional, let's say 40 pips, 30, 40 pips. Okay? There's still about 30 pips more to make. Now, New York can come and take you out completely by canceling by counseling all the move that London and Asia has made. Those are the days we call reversal days. So on the reversal days, the market can reverse all the positions that you have. It will just, take everything away. Okay, and I'm going to teach you how to know which days are reversal days, so that on a reversal day, you just close the two positions. If not, if you're holding on a reversal day, if a day is a reversal day and you are holding on that reversal day, you're going to have serious trouble. The trouble you're going to have is that you would lose the profits that you've made on the 2.0 position, and you will get stopped out on the 2.0 position. And then you could have avoided all of this if you had spotted the reversal that came in during the New York. So if New York did not show you any reversal, then you continue to hold. You continue to hold until the end of the day, around 6, then you close. All right? Okay, so while this is still pulling back, I'd like to take the entry for a sell. Okay, remember it's for a sell, and then we have the setup complete for a sell. All right, so My entry for a sell, of course, I have to use a pending order. Okay. Ooh. Okay. So on USD card, we're trying to sell. Where is it? USD card. Okay. So I'm not going to use the market. I was clearly being filled, right? I've been filled. Okay, I was filled. That's why I used it. Okay, so I've been filled. That's why I used it. Now I'm going to do the right thing, which is a sell stop. Okay, so I'll use a sell stop. My position was 7.13. Okay, 7.13. So I will. Okay, so I think I have to use what's it called? I have to use a market execution now because um I will not be allowed my I can't you can see what's happening on my screen. Okay, I'm sorry. I think my face is covering it. So you can see that if I try to put a pending order now, I would be filled. So I'll just use the market execution, right? Because the price where I want to get in on is already, taken. So I'm going to go in with 5.13 sell and another sell 5.13 and sell 2.00. Okay, so I will sell 2.00. I still have margin. All right. If you have any question regarding uh what I'm doing now, please let me know. If you have any question regarding what I'm doing now, please let me know. You can send a message. I don't know if you're allowed to if you're allowed to send me a message on YouTube. If you're not, just send it to me on Telegram. Okay. So we have of course we have an entry here. We have an entry here for 1:1.5. Okay, for 1:1.5. And then on Euro card, we also have the sell, which is ongoing. And then remember, I corrected myself. I said it was 1.2, but we're going to take profit at 1.5. Okay, so when the market gets to 1.5, we take profit. The stop loss here is 17 pips. Okay. Okay, so someone is asking how we can get the currency pair. Okay, the strength of the currency pair every day. Okay, before trading. It's a good question. It's a good question. I teach. Yeah, yeah, yeah. I teach. I'd rather teach traders how they can make the currency strength by themselves than give it to them, because I believe forex is independence, right? Forex trading is supposed to make you independent. Okay, so if forex is supposed to make you independent, then why would you depend on someone's signal provision, or what someone else is doing somewhere? Why would you depend on it, right? If I come and say, okay, wait for me to give you the currency strength every day before you place a trade, it won't make any sense, right? It won't make any sense, because it means that you are not free. You are depending on me. Okay, what if I am not available to give you the currency strength for the day? What do? You will not trade, right? You won't trade. No, you will. You have to trade. Okay, but you can't if you rely on me. All right, so I'm going to teach the mentoring program I'm doing for this month, okay, I think middle of this month. That mentorship program is going to be free. All right, I'm going to teach you some of these things. But after this free one, the next one is going to be paid. Okay, because I know that a lot of people are not, how do I put it now? They do not particularly value the free stuffs, right? So, but when you tell them to pay, they will say, this thing that they're asking us to pay for, okay, let me pay, and then they will be serious about it. Okay, so that's the way most people approach these things. But I'm doing it for free so that the guys who genuinely do not have the money to learn good stuff, but are keen and are interested in getting better as traders, they can learn these things and then get better. So I'm going to teach how you can generate the currency strength. I'll teach it on the during the mentorship program. Okay, this on Thursday we're going to have a live Q&A session. I already mentioned that. So on Thursday by 7 p.m. we're going to have a live session where I'm taking questions from you. Okay, and in that live session, I'm going to also prepare. I'm going to prepare you for. I'm going to prepare you for the mentoring program. Okay, because my mentorship program is not like the regular mentorship program that you get out there. All right, my mentorship program is extensive and is really deep. Okay, and I'm going to do my best. Okay, I cannot assure you because it is free. And then because it's free and I'm going to be having a lot of people. I don't know how much quality, right, at a personal level that you will get, right. I don't know if you will get the. So I have a one-on-one thing and I have a group mentorship thing. These are like the actual people that take my time. All right. So, and I am interested in them because they've made a commitment and they are with me, right? And I believe that their success, their growth depends on me. Okay. So in that case, usually I am moving them. It's like a career thing, right? I'm taking them with me on my strides, right? I'm trying to get them to at a one-on-one level. That's what I'm trying to say. At a one-on-one level is different. But for this free mentorship, I'm going to do my best. Okay, I'm going to do my best, right? The only thing I cannot guarantee is that one-on-one level mentorship, right? Because it will not be too easy for me. I mean, it's just me, okay? It's just me, right? And then I cannot have people who have said, okay, I know you do free stuff, but I want to pay. I want to pay you to teach me one-on-one. And I want to pay you to, join your group mentorship. I cannot leave them and then have, just after my live session with you guys, right? I'm going to have a class. I have a class with the group guys, and then with the one-on-one guys, right? So you can see the people I spend more time with are the people who I believe will obviously come out with the better result, especially with all of these things that I'm saying, you know. And then trading takes time. Trading requires studying the trader, um not only the setups, right? Studying the trader. You have to, if it is just a thing of give us a setup and we will buy or sell, right, and make money, everybody will make money. But there is more to it, don't you think? There is more to it. Seems that the USD card is not looking favorable. Okay. So, but we'll still hold up to the stop loss, okay, until the stop loss is hit. Just to be sure that I have my stop loss thrown in. Okay, so I just observed something that I have made a mistake in my execution. So I'm actually selling AUD USD and I'm in profit. I'm selling AUD USD and I'm in profit. So I'll just close that now because I know that it was not part of the plan. It was supposed to be the smaller position size for my AUD, for my USD card, right? That's the one in profit. So I have just closed it, right? And so remember that this strategy is not designed for you to come back and try to adjust your stops or do anything. If you're wrong, don't fight with the market. Just go. Take your 1% loss, 2% loss, and go and wait for the next day. That is the best thing to do, because if you continue to fight with the market, if you continue to say, oh, it's now going up, let me buy, the next minute you will see that this thing will start to come down. And then if you think that, oh, it's coming down now, let me join, then it will pull back again, right? So you have to just put the position on and exit the screen. That's what I recommend. Exiting the screen, for me, I think is the best that traders can do. Just leave the screen and then come back after some time. Okay? Please make sure you put in your stop losses if you haven't done so, right? And the reason why traders have to also look at their calculator is so that on the days when you are not correct, you're not losing more than 1%, more than 0.5. Okay? This is very, very important. It's very important for traders to know. Okay, so I think what we have to do at this point is to allow the trade to run. Okay, so we allow the trade to run either to TP or to SL. Okay, so by 11 o'clock, you come back. Now, I assure you that the market is pulling back now, and traders are looking at it and they are, panicking. The ones that have used all their, if you have used a bigger position than 1%, okay, so you see, this is what makes a good trader a good trader. A good trader is a trader that when they are losing, they are not angry. or sad. Okay, when they are losing, take note of what I just said. When they are losing, they are not angry, they are not sad, they are not irritated. That is the hallmark of a good trader. The hallmark of a bad trader is when they are losing, they are angry, they are sad, they are not happy, they feel tense, they feel pressure, they feel all these things. And the only reason for that is high lot size. Okay, that's the only reason for it. If you're risking too much, if you are risking too much on this trade, if you're risking, let's say, 10% of your account, 20% of your account, you cannot trade correctly. Okay, you cannot leave your stop loss where it's supposed to be. You cannot do the right thing. It's a given, it's a natural thing. Okay, you can't. Right? So my recommendation is always manage your risk. It will save you from a lot of emotional troubles. And if you don't have capital, get a prop firm. Get a prop firm. At least, as long as you by the statistics. Okay, let me give you a quick story. Now, a trader comes to, he's trading something that I particularly don't like. Okay, I don't like the method, right? But he comes to me and he says that, okay, sir, this is my statistics, right? I've been trading using this pattern, and then on paper, this is the result. And then he's showing you his equity curve is just like an airplane that is taking off. He's making money month after month, right? And then you can see his journal, the reports from every trade. He's making money. I mean, why wouldn't you give him more money to trade with? Okay, so that is the way it works. On paper, as long as you're profitable, all you will need is capital, and nobody is going to deny you capital. Okay, nobody is going to deny you capital. All right? As traders, we always like to see the market just, move straight to our target when we have been filled, right? So, but it's not like that. And there are so many reasons for this. Okay, there are so many reasons for this. Number one is, we know that that pair or that currency is a strong currency. But the currency might not be willing to sell on that day or buy on that day. Take note of these things I'm saying. Okay, CAD is strong today. But what if today is a trading range day? What will happen? Even though CAD is strong, because today is a trading range, the market will just keep going up, down, up, down, up, down. So it will not just go straight. There are days when I open the trade and I get filled, and before 10 minutes or 15 minutes, I've gotten my 1.5%. Right? Before 10, 15 minutes, I've gotten my 1.5%. I've gotten my 2%. And I go out. Some days are like that. Okay? And then there are days when you put the trade, you come back by 11 o'clock, the market is still going up and down, up and down. It's not on your stop loss, it's not on your target. Right? So that is why I said you need to take the mentoring program, so that I can show you how to manage trade. Trade management is a course on its own. And traders ignore this thing. Journaling is a course on its own, and traders ignore it. Right? You have to journal your trades. Before you take the trades, as I'm talking to you now, my OBS is on. All my mentorship students, I've asked them to install OBS. Why? Because I want to see what I'm doing on my screen. NBA players, they go to watch all the tapes, all the old tapes. Same thing with football. Before a team will play another team, they will look at all their tapes. And then these are professionals. If you want to be a professional, you have to keep track of these things. Okay, so by 6 o'clock, when I come back, I'm going to play, I'll just go over my day. How do you go over your day? You look at your recording. So if I come back in the evening now, my OBS is running. OBS is a software that allows you to record your screen. So what I'll just do is I'll go to the OBS and then go to the relevant places and then see how the bars were printing, see how I manage the trade. Now, I've been doing this for many years and I'm still doing it. Why? Because it makes me feel like a professional and it makes me get better. If I see something, I can tell you beforehand that, okay, this thing is going to work and this thing is not going to work. Why? Because I have played this tape over and over and over and over and over again. And I see that, okay, these things usually end up like this. These ones usually end up like that. Okay, so this thing takes a lot. It takes a lot of work. It's more than what you think. What's his name? Bellafiore said that if you think that somebody can just give you a set of indicators or rules for you to buy, a signal to buy here or sell there or buy here or sell there, right? If you depend on that and then you think that you're going to get to your Lamborghini lifestyle and your wealthy lifestyle, right? If that's what you're thinking, you are in what he called trading Disneyland. Okay, you are in a trading Disneyland. It's a Disneyland. You're just dreaming. If somebody says, okay, buy here, sell here, and you become a forex magnate, you become an elite, it won't work. I'm telling you categorically, it will not work. This thing is hard work and it takes time, right? It takes time and it requires journaling. It requires a lot of journaling. A lot of journaling. You are looking at the setup, the rules for the setup, whether you're allowing them to play out correctly before you enter. You are also, that's not the only thing. You are also looking at your compliance, how you are thinking when you are putting the trade is more important than the setup itself. Traders can open a trade and just get out, right? Because they see one or two strong bars against them. Meanwhile, that trade is supposed to be a winner. But what? They're out. Because they're thinking fearfully. They are afraid. They probably have risked too much and now they're scared. One of the ways to trade right, in my experience, is to make sure you're not risking too much. And make sure that anytime you open the chart, you have a setup that you are going for. If not, the market will force you to do Fibonacci, do SMC, do retail, do price action, do support and resistance, do trend line, do this, do that. Everything will come at once. So the only way to trade correctly, in my own opinion, the only way to trade correctly is to know what setup you are coming for. You can have different setups. And then you go into the market looking for those setups. When you go into the market looking for those setups, you are checking the statistics. During the mentorship, I'm going to teach more on this. You are checking the statistics. What I mean by checking the statistics is you are looking at, on paper, what is this setup doing? And how easy is this setup for me to comply with? Right? So you're looking at, your P&L, of course, your P&L is going to be reflected on the paper. You're looking at your win rate. You're looking at how easy is it for me to comply with the system. How does it make me feel? Is it in line with my personality? Okay, because if you have a personality that is a spontaneous personality, right? You're somebody who act on impulse. You see a white bar, you want to sell or you want to buy. You see a black bar, you want to sell immediately, right? That's a personality. You have to work on it. Because a personality like that may not be good for trading, especially if you're a day trader. Such personalities may be good if you're a scalper. You trade on impulse. You see something is happening, you want to just go in. You see something is happening, you want to just go in, right? If you're that kind of trader, okay, you can think of scalping and then look for, ways to help yourself to get better results or to get good results. All right, but if you're an intraday trader, you have to check boxes. You have to make sure that, okay, this has happened, this has happened, this has happened. Now, since this and this has happened, okay, I think my trade is due for an entry. And then you enter the trade. If it's the kind of trade where you have to, I don't recommend sitting down like this and looking at the price going up and down. I don't recommend it because in doing so, you are exposing yourself to the movement and the erratic nature of the market, because the market is usually erratic. The market is chaotic. And then the market at every point in time is going to make you think that, are you sure we're not supposed to buy today? Because I have an indecision bar here followed by, I have an indecision bar here followed by a signal bar. Are you sure this is not a liquidity sweep for me to buy? Okay, maybe I'm wrong. Now, what do? You now say, okay, there's a follow-through bar. You buy, right? You buy, you put your stop loss here. When on that day you're supposed to be selling, right? You put your stop loss here. And then what do? The market will give you a reason to say, oh, no, this your buy is wrong by printing this black bar. If you say, okay, this black bar is the inside bar, let me put my order here to wait for me to see if I get filled. The market may feel it or may not feel it. And then when the market feels it, you think that you are right. And then tomorrow you come and repeat that bad habit. Right? And then if the market ultimately comes back and then goes down, and then you see the market will beat the arrow, the target, and then continue down. And then you tell yourself that, oh my God, I would have waited to see now the market still went my way. Right? So that's why I do not recommend traders sitting down like this and looking at their trades, because if you don't have a nose-diving market, you might not be able to handle the trade correctly, and then you lose. The only thing you're looking for, which is what I teach, is when you come back, you're looking for, you're looking to see that the market has cancelled, it has annihilated the reason for your sale. And that happens in New York, not now. Right? Not now. If the market decides to take your stop, it means that, okay, yes, you might be right about the fact that CAD is strong, but you're not right. Or the market is not just ready to sell. It doesn't mean that CAD is not strong. It's just the market telling you, I'm not ready. And then do you fight the market? No, the market is king. Price is king. You listen and you wait. If the opportunity presents itself for you to sell again, you sell, because that is your bias. But don't switch from buying to selling and buying to selling and buying to selling. That's not how to trade. That's not how to trade. You got to be careful about this, because it's a habit that can destroy any trading account that you touch. First, you need the big picture. You need the big picture. The big picture is who is strong, who is weak, where's the trend, where's the order flowing, towards, where's the order going, right? And then you want to join them and take the little one that you can take, your 1%, your 2%, and go. Okay, so This is what we have today, right? That's what we have today. I'm going to end the session soon. If you have any question, please send your questions to me. All right. If you have any questions, just let me know. There's a chance that I may have been stopped on USD card. Okay, so this is the reason for giving the market a little bit of room, right? If you didn't give room like I did, I'm sure I gave some room. If you did not give room, you will be stopped, except your spread is too much. Okay, so you need to give some room. But away from that, even if we're stopped here, we're stopped for a 1% loss, right? If we're stopped. Okay, I've not been stopped. My USD card is still ongoing. So is my Euro card. Okay, so this is the part where you have done your own part. Okay, the market has showed you your entry. You have taken the entry. Now all you can do is to wait for the outcome. Okay, and remember, it's probabilistic. It's probabilistic. Don't force it. If today works, fine. If today doesn't work, we come back tomorrow. Okay, so I'm going to come back to the chart by 11 o'clock to see what has happened. All right. So I'm going to end the meeting here now. All right. So thank you so much, guys, for joining me this morning. I hope that you have learned something. Okay, I'm seeing a couple of questions. I'm seeing a couple of questions here. When do I enter? Somebody's asking, when do I enter? Yeah. Makes sense. Yeah, there's something I thought. I said that okay, I'm seeing some very constructive, very important questions here, which I would just address before I exit. So Khalifa said that he risks 0.5% until he has gotten his buffer. I like that. I particularly like that because if you are not in the character of risking, if you take a prop firm, for example, from the beginning, you're risking your own capital. That's, you're risking the capital. And remember that they have a rule of drawdown. Okay, so what I teach my students, okay, is to get a buffer, right? I think that's why Khalifa mentioned this now, right? Use 0.5%, right? Use a small percent risk because you are on your actual capital. You don't have profits yet. These profits, I call them buffer. That's the first profits that you make on your capital is called a buffer. Now, you cannot start with your own capital and you're already pressing your account with a 2% per trade. It means that if you take 2 losses, you have lost 4%. That is going to be a drawdown for you. So start with 0.5 so that if you take 2 losses, you lose 1%. I'm going to teach you something during the mentorship program. Your drawdown and your recovery is not the same. It's usually the relationship is exponential. If you have a drawdown of 10%, you don't need, if you make 10%, you will not cover for that drawdown. Because your capital is now, if you have 1,000 and you make a 10% drawdown, meaning you now have 900 from 1,000 to 900. Because you had 1,000 before, now you have 900. What has happened to you is that even if you've lost 10%, even if you make 10% on the 900 that is remaining, 10% of 900 is 90. So you lost 100 by losing 10%. But if you make 10% gain on 900, you will make 990. You won't make 1,000. Now, this tells you something very important. It tells you that anytime you're taking the trade and you have a drawdown, you need more money to recover. So for me to recover a drawdown of 10%, I need 11.5%. If I get 11%, I will now cover my money and go back to $1,000. I lost 10%, but I need 11% to recover. If you lose 20% of your account, meaning that you have lost $200 out of $1,000. If you lose $200 out of $1,000, now you have $800 as your account balance. If you make 20%, 20% of $800 is $160, meaning that after you lost 20% and made 20%, your account balance at that point is $960. So you look at the relationship, you see that, oh, although I lost 20%, now I'm making 20%, but I'm not making back my $1,000 because you need more money, you need more profit to recover your loss. That's how it works. Okay, you need more money to recover your loss. So you need 25% to recover a 20% drawdown. If you make a 50% drawdown, you need 100% to recover. If you have $1,000 and you lose 50%, meaning that your account balance is now $500. If you make that 50% drawdown back, meaning you lost 50%, now you've taken your account to 500. Now you make 50% gain. 50% gain of $500, which is your balance, is $250. It means that your money will now be $750 after you lost 50% and gained 50%. What do you need to recover that account? You need 100%. So if you lose 50%, you need 100% to make back your money. So if you lose 50% on 1,000 and get 500, you need 100% of that remaining 500 to make back 1,000. Meaning you need to double that remaining $500 to make back your initial balance of 1,000. Okay? So I hope you get the difference here. Now, this is why I said, okay, start with a buffer. Don't allow yourself to get drawn down. Because if you get a drawdown, you're going to need more money to recover. So start small. Don't go too deep into your original capital. Start small. Take it little. Start with 0.5, 0.25, 0.5, 0.25, 0.5. Then when you have gotten like a 1% profit, 2% profit, 3% profit, that's a buffer. Then you can capitalize on it, right? You can now go to full 1%. At this point, you now have a buffer. You are not risking your original capital. You are risking from the profits that you have made. So you don't have any drawdowns to deal with. Okay, so I hope that it makes sense. When do I enter? Okay, Forex Blues, you're asking when do I enter? You have to go to just from my page now. You can look for the what's it called? The last class I had, right? I believe is there. So look for that class and then join. Okay, just watch it, right? Watch the class. Look for the one I said, London Session Strategy. You will see it there. Okay, so look for it, watch it. When you watch it, what I've done today will make more sense. Okay, watch it before you come back here. And then this one will make more sense. Okay. All right. So I think that's all for now. I just quickly checked the trades, and I think my Euro card is in profit. My USD card is not yet in profit. Okay, so the good thing here is that if you remember that USD is equally strong. Okay, don't forget that. That if we're having difficulties with USD, is because on the what's it called? Look at this thing again. Look at this thing again. If we're having trouble buying, if we're having trouble with CAD, CAD and USD is here. You can see the reason. The reason is here. CAD is strong. USD on the USD on the daily is strong. Okay, so what it means is what it's telling you is that, okay, if it is strong, right? If it is strong on the daily and getting weak on the H4, right? If this is what is happening, right? It means that this guy has a potential of being strong. If you're trading CAD AUD, okay, let's look at let's look at these charts, okay, so that you can see what I'm saying, right? CAD is strong, AUD is strong, GBP is strong. Let's see what the market looks like on these pairs. So GBP CAD, GBP AUD. So let's look at GBP CAD and GBP AUD. GBP CAD is right here. I think I need to go one more. So this is GBP CAD, right? So you can see what the 5 minutes looks like on GBP CAD, right? So is CAD, of course, CAD is strong. So is going down, okay, but you can see that it's not smooth. It's not what you would like to see. Okay, this is the H1. Okay, this is CAD. Of course, CAD is strong, but you see the rejection here because GBP is equally strong. Okay, GBP is equally strong, right? Even though CAD is like the main person that is strong. Okay, CAD AUD. Look at CAD AUD. I think AUD is strong, CAD is strong. This is the result. AUD is strong, CAD is strong. This is the result. You can see. Okay, so even though CAD is strong and trying to fight back, because AUD is also strong, if you if you're in it, just look at this area here. If you're in it, you find it very difficult to make money. Look at spikes. Spike, market races up, comes down. Comes down, you think it's going to sell, it will raise back up. Goes up, you think that it's breaking out, it wants to continue to buy. It comes back down. Comes down, goes up, comes down like that. And then it's going up again. Okay, so it's going up, down, up, down, up, down, up, down, up, down. Why? Because the market is, look at it. If you're trying to trade anything here, you will lose money because it's going up, it's coming down, it's going up, it's coming down. And then look at all the wicks showing you that, the two of them are clearly struggling. They are fighting with each other. All right. And then I think that's a similar thing we're seeing with the USD card that we are in. Right? Because, even though we know that CAD is stronger, USD is inherently strong. It's inherently strong. And then what that does is, or what that tells you is, if you're going to take this trade, try your best to make sure that you don't expect a complete domination, right? A complete dominance. You don't expect that the market will just, fall and fall and fall and fall and fall all the way down to the end of the day. That's not your expectation. All right. So, and then what makes a trader a great trader again? Of course, there are so many things that makes a trader a great trader, but this is one of them, right? You have your expectations of the market, right? Now, when you have an expectation, okay, you trade based on what you anticipate, right? You anticipate that the price will move down or up. You anticipate that price is going to behave a certain way. Okay? We anticipate that if the market breaks the Asian low or high, because this is a sensitive area, right? Frankfurt opens, of course, is this everything here is Frankfurt open. After the Asian high and low is made, there is the Frankfurt high and Frankfurt low. Okay, Frankfurt high and Frankfurt low is from 6:30 to 7:30. From 6:30 to 7:30, that's when you have Frankfurt high and Frankfurt low, and that's where you see the market trying to deceive people to lure them to do one thing or the other. All right, so everything you see here is just deception. If you buy, you are wrong. It will sell and stop you out, right? If you had bought, let's say you come here and say, oh, liquidity sweep, you buy engulfing bar, you buy inside, after engulfing bar, inside bar, follow through bar, you buy. You did not get to target, you are stopped. Is it not? So it means that if you had bought this market, you would have been stopped out. Everything is correct for a buy, but you would have been stopped out. And then if you said, oh, no, that one did not work, let me look for another buy. You take this buy here, this one, you would have been stopped out with this week, right? You would have been stopped out with this week. Yeah, you would. And then your trade would have not gotten to target before you would have been stopped out. Now, what if you bought this current one now? You say, okay, let me buy USD card, let me buy. You buy this one, enter here after the follow through bar. You enter here. This one goes up. Immediately it goes up, it climaxes, and then it starts to pull back. So what do? You bought here, you lost. You bought here, you lost. Because you're fighting against the trend. The actual trend here is down. That's the actual trend. So the only way you can make money successfully is to go with the trend. Now, what brought us to this discussion is, why is all these things fighting? It's fighting because on the graph that I showed you, USD is strong on daily, right? So to be on a safe side, to be on a safer side, in terms of trade selection, we could have done card against the people who are completely weak, like JPY, like CHF, like Euro. Of course, we have Euro, NZD. You see, so let this also come in as like as an example for you to see the different scenarios. Okay, the different ways that you could have traded, or you could have selected your trades. Okay, will card USD work out? I know it will, or it might. Okay, if you see your setup saying that this is strong, this is weak, it will work. But expect the market to fight you. Expect the market to fight back. Right? Because this one has some strength on the higher time frame. So it's not going to just leave itself for you and just allow you to beat it up. And that's exactly what we're seeing on the chart. It's fighting back. You can see it keeps fighting back because it's equally strong. The fight back we are seeing on USD card is nothing compared to the fight back that you are going to see on card JPY, for example. This is card JPY. Let's go to 5 minutes, right? Card JPY would have been, card is strong, so buy. Let's see the Asian range. Okay, we do not have an entry here because this is the Asian range. And then that's the advantage of having a setup when you have the strength. Okay, so the setup is supposed to help you to say, okay, you people have the strength to break out of the Asian range or to do a liquidity sweep heading for the other side, right? Now, I am hoping that this strength will carry you. So, but even though CAD is strong, JPY is not allowing CAD to even come out. It's not allowing it to come out of the Asian range. So it means that there might be something inside. Okay, there might be something at the back right now that is preventing or that is giving JPY strength. Now, this brings me to something which is very important. Now, even though we know that this is the strength, okay, even though we know that this is the strength, can it change? Yes, it can. It can change. It can get better. It can get bad. CAD can get even stronger, or its strength can reduce. USD is neither here nor there. It's neutral, right? It's neutral. It can get strong or weak. Now, we just hope that what is happening will keep happening. But nobody can predict the future. Nobody can predict the next 10 seconds. Nobody can predict the next hour, the next day. Nobody can. Okay? As regards the market, nobody can. Okay? And I mean, the best we can do is say, okay, the CAD is strong. We expect it to continue to be strong. Or Euro is weak. We expect it to continue to be weak. But it doesn't mean that cannot change in the next minute. Of course, something which is also important for me to point out is, which I have done before I started the live session, was to look at the news. Okay, so I knew that there was going to be the AUD news. So I waited until after the AUD news before I did the consensus, because I know that the news is going to bring in volatility, which is going to cause movement, and which is going to make some of the structure to change. Okay, so it's either going to further verify a structure or it's going to change a structure. So I had to wait for the news before I did the consensus, right? So after that news, I don't think there's going to be any other news that will make sense today. All right. So that's another thing traders can do. But apart from the news, are there other things that can affect a currency? Yes, the economy. This is fundamental analysis, right? The economy, something can happen. Toyota can place a deal that will give JPY, Japan, right? That will give JPY strength. And then we are all saying JPY is weak, but all of a sudden it starts to go the opposite way. Yes. That's the reason why as a trader, your work is to continue to manage your risk. That is your work. That is your job. That is your job. You got to keep managing your risk, and then look for opportunities where you can take a risk. So look for the opportunity, put your 1% on it, your 0.5% on it, and then you wait. You wait for the outcome. You can't pick everything. You can't pick every move. You can't win every trade. You can't. Okay. So I am finally going to end the class at this point. Okay, and I'm hoping that we have a successful trading day as it already seems. Okay. So this is I think, yeah, 1:1 is filled. So we're waiting for 1:1.5. Okay. So 1:1. This is 1:1 is filled. 1:1.5 will be filled somewhere around here. Okay, so this is 1:1.5, right? So I have two positions. One is 6. The other one is 3. The one that is 6, I expect it to close when the market gets to this point for a 1:5, 1:1.5. Okay, so if that one closes at, what's the price? At 1.43424. So once this market gets to 1.43424, it means that I have gained 1.5% today. So if my capital is $10,000, I have just gained $150. That's what it means. Okay. Now, what does it also mean? It means that since I had two positions on, Since I had two positions on, it doesn't mean I beg your pardon. It doesn't mean 1.5 on the total 1%. It means that I have gained about 1%. Right? I have gained about 1%. Even if this market turns and goes to stop me out, I have gained 1% because I remember I had two positions. One position I risked 5. Was it 5? No, I risked 6. Sorry. Delete that. So on one position, I risked 6. Okay? On one position, I risked 6. On the other position, I risked 3. Right? Now, I want you to follow me quickly. Now, both of them means that my risk on this one is, if I have a risk of 1%, total risk of 1%, it means that my risk here is 0.66. Right? My risk here is 0.66. Okay? 0.66. Sorry, I'm not using my pen to write. And my risk here is 0.33. 0.33, not 33, okay? So it means that this is 1/3. This is 2/3. Now, if I take my profit of 10 profit, okay, now what happens to this 0.33%? It will give me the potentials for more wins, so that if the market wants to be generous, I don't prevent myself from benefiting from the generosity of the market. We know the market is not known for its generosity, but if the market is deciding that today I'm going to give you a full-fledged black candle on the daily time frame, which is going to send this market maybe another 50 pips lower, my 0.33%, which is the 3 lot size I have as the second position on this same trade, is going to now give me that profit. Okay? So my 0.33% is what is going to now give me that additional profit. So instead of stopping at a total profit of 1.5, you see that this smaller position over time will end up giving you the bigger wins. This market can give you, if you have 3 standard lots, this one has run for this one has run for just about, from here to here is about 27 pips. Okay, this one has run for 27 pips. If this one run from this 27 pips, it continues. New York comes and continues the downtrend, and then it gives you a total of, let's say, about 80 pips. This one only gave you 23 pips, but this one is giving you 80 pips. 80 pips of 3 standard lot is about 2.4%. Right? 80 pips going by 3 standard lot is going to give you 240 or 2,400. Right? It's going to give you 2,400. 2,400. Here on this one, you made 6 times 2.7 is about, call it $1,800. It's not up to it because it's 27. It's 30 that is 1,800. Okay, so Let's say 1,600. So 1.5 gave you 1,700 or thereabouts, right? But this one, because the market was a trend day, this one you held throughout the day down to about, let's say, 6 o'clock in the evening, has now given you 2,400. So if you add your 1.5, if you add the 1.5 you made here, which is 1,800 to the 2,400, you can see that you have made about 4-5% on this particular trade. All right. So take note of this. This is so we cannot cover everything in one day. I have to end the class now so that I can attend to the paid students. And then thank you so much, guys, for joining. Those of you who have not joined us, just join us, okay? Yeah. Exactly. Yeah. That's the point. Yeah, Kali. Yeah, you're right. It's definitely going to make you manage your risks well when you trade with your buffer. All right, guys. Thank you so much for joining me today. I still hope to have more classes with you. Okay, so um, just be patient. Okay, be patient. Right, be patient. Don't be in a hurry. Just take your time. Be patient. With time, everything will get clearer and clearer and clearer, and then you will find yourself, making a lot of money. Thank you so much for joining me today. Do have a lovely day, and may the peeps go with you.